that same idea that I had a year ago is the same idea I've got now, which is like that was the end, that was the bottom of winter, of crypto winter and macro winter. And I started seeing that the liquidity conditions were turning and they bottomed out. And that gave me the signal to start getting more bullish on assets. And it's continued to play out that way. And it's kind of, I think had people have heard me say, well, Solana's going to be up 200% this year and, Bitcoin up 100%. At the bottom of that bear market, nobody believe you. Like nobody believes that NFTs will go up again ever. It's all the same. It's all the same cycle. And so, I've got a bunch of charts as well. We can show them later about some of this liquidity stuff so I can update people.
In the tumultuous landscape of 2022, macroeconomic expert Raoul Pal defied the prevailing sentiments by taking a contrarian approach. Amidst the crisis faced by the crypto exchange FTX and a widespread decline in the crypto market, Pal made a public display of purchasing crypto assets aggressively, acquiring a substantial amount. Contrary to the prevailing pessimism, he maintained an outspoken bullish stance, even going so far as to pinpoint November 2022 as the market's low point, a prediction validated by Bitcoin's subsequent surge of over 100% in the following 12 months. In a recent interview, Pal elucidates why, 1 year later, his optimism remains unwavering, providing insights supported by charts and data. Pal's conviction centers around several factors, notably the anticipated increase in liquidity entering the system, which he believes will serve as a catalyst for a substantial uptick in the crypto market. His interview promises a deep dive into the intricacies of his bullish outlook, shedding light on the unprecedented circumstances that he believes will contribute to the imminent growth of the crypto space. For viewers, the video's conclusion holds a valuable revelation, where Pal articulates, perhaps more comprehensively than ever before, the reasons behind his resolute belief in the forthcoming surge of liquidity and the resulting potential for a significant upswing in the crypto market.
I thought we would have had a negative GDP quarter by now, but we haven't. But the market's priced it all in last year. I mean, crypto was down 80% and the NASDAQ was down 40 or 38 or whatever it was. We priced in a recession because it seems that markets are now just trading off the liquidity cycle, which tends to be forward leading on the economy. And so I still think that Q4 is a recession and Q1 is probably a recession quarters. You can kind of feel it everywhere. I say this often, and find me one person who in their business has not seen sales decline or laying off people. I don't know anybody. It's not just crypto. It's across every company. So, it just feels like there's a lag to that data that's to come. And I know we probably end up with some ludicrous blockbuster GDP number for last quarter, but I don't think it's about last quarter. I think it's like where we are today. You can see it, the oil market can't quite get out of its own way. And that tells you there's a demand problem. If we were really strong, we'd see a strong copper market. We're not. There's a lot of signals to me to say, things are much weaker than the headline is expecting. And weak things, but talk about weak things. The single most important thing for everybody to watch on the screen is the BKX, the banking index in the US, the ETF there. I mean, that is close to, where are we today? 71, 74. We're getting close to breaking the lows. Basically, to understand the game we're playing is GDP is driven by population growth, productivity growth, and debt growth. The issue is population growth, that's the US, been declining. Working age population is declining. Productivity is declining. And debt has tapped out. That's debt to GDP. So we're like at enormous levels of total debt to GDP. We've got no engines of growth. GDP is what pays the bills. It was what pays the interest on the debt. And trend rate of growth has been falling over time. So this is the big picture view. 2008, some magic happened. The magic was the debt jubilee. The debt jubilee was when the world blew up, when every major economy started to get to 100% of GDP in debt at government level, ignoring the private sector level. Basically, there's not enough GDP to pay for all of the interest payments on the debt. And what they did was this debt jubilee, which was like, you don't need to pay your interest. It's now zero, right? Everybody got given that gift in 2008, 9, 10, 11, 12, 13, 14, 15. So that whole period, everybody reset all of their debts to a 3 to 5 year debt cycle. And that funding cycle is now the thing that drives everything. And I'll show you some more on this. And this is only a part of the everything code, but it's part of this whole idea. It also happens to correspond with the Bitcoin halving cycle, and it corresponds with the US election cycle. They're all the same thing. Everything is one cycle right now. And if you understand that cycle, you kind of understand everything. And it will get broken at some point, but to break that cycle needs population growth to change, productivity growth to change, or debt growth to change. If not, we're in this cycle. The population growth is what I think does change, because AI and robots are productive units that basically replace people in the workforce, and they're now and will become infinitely scalable. It's not yet, but by 2030, 2032, something like that, this is infinitely scalable people in terms of productive units. That changes the entire equation for mankind, changes productivity, everything else. So going on to the next chart, the cyclicality here is, here's the ISM, and the ISM 22 months ago is the ISM today inverted. It's because everything has become this incredible cyclicality, which tells us we're at the bottom of the business cycle right now, the recession point, and we're starting to go higher. Now, ISM leads GDP by a quarter, because it's monthly and GDP is quarterly. And so what we're saying is, around a month ago, or 2 months ago, we were at the low of the business cycle, which is why we should see a recessionary quarter. Our weekly leading ISM index also pointing to the business cycle higher, which is the picture that I'm trying to get across for 2024, which is recovering economy, falling inflation, is really what is known as macro summer and crypto summer. That is the holy grail. That is the one where you start to make the real money. And that's coming, and we're very close to it. Usually, you need the ISM to cross up back up through 50 for that to be confirmed, and that's when things start to get a little crazy. So the next chart is, okay, this is this rolling debt cycle. You can see pretty much all of the debt in the US matures between 1 year and 5 years. And that's the issue. We have to keep rolling this debt and paying the interest on it. And we've just had a massive rise in interest rates, and the massive rise in interest rates means they have to issue more bonds to make the payments on the interest payments as they come up to mature. We've got this maturity wall of something like $12 trillion of debt that has to be rolled over the next 18 months or so. That there is no way for the markets to absorb it. The government debt to GDP, as I said, when it got to over 100% of GDP, then there's not enough GDP to pay that debt, considering the trend rate of interest growth. Trend rate of growth has been about 1.75%, and interest rates are currently at 5%. How the hell do you pay for that? And don't forget the private sector's in debt. What we had for a long time was what I refer to as real rates, which is 5-year yields minus GDP growth. They were negative for a period of time. They've been trending lower, currently positive, and that's restriction rate right now. I know this is going to be a bit complicated for some people, but you guys will understand what I'm talking about. The big thing is, okay, how the hell do you pay all this interest? How do you roll all this debt? And the answer is this chart. I think I was the only person in the world to find this chart, which was the Fed balance sheet basically lags the interest payments by 36 months. So the previous interest payments from the last cycle get shunted onto the balance sheet and monetized. This is debasement of currency, pure and simple. And this is, in fact, all of the central banks, the UK, the US, the EU, Japan, Australia, everywhere is exactly the same. They're all monetizing the interest payments on their debt. When we zoom in, we are at this point in the cycle. Q4 is the start of the increase in the need to pay interest. If they don't, they'll lose control of the bond market, which we're already seeing, right? This is the first blip up of the interest payments, and we're already seeing, bond yields can't get away from 5%, and if we're not careful, it'll be at 5.5% and 6% in this panic, because we've got all of this stuff to roll. So we're getting to the end game. The banks are telling us it's the end game. Here's the GMI weekly global liquidity. So this is the 5 major central banks and their net liquidity scores versus the NASDAQ. It is a 97.5% correlation. If you look at the periods where they stopped reducing the balance sheet, like 2019, the equity market takes off, because particularly in technology and particularly in crypto, and the reason being is they are structurally secular trends based around adoption of technologies. So they tend to rise very quickly afterwards, which is what we've seen this time around as well, as Fed net liquidities actually stopped rising, stopped falling. And so the NASDAQ took off. And that's pretty normal. People say, well, it just mean reverted in 2020. 2020 was an abnormality. Normally the balance sheet would have just caught up, as the market kind of front runs this whole situation. So there's the NASDAQ, yes, 95.5% correlation. Crypto is Bitcoin is an 86.5% correlation. It's all driven by the balance sheet. Now, but don't forget, their voters, who are the boomers, benefit from asset prices going up. So they're kind of politically incentivized to do this, particularly now going into an election as well. The other way around it is yield curve control. And that's buying all bonds at one price. That also ends up on the balance sheet, and the Bank of Japan have been doing it. So, yeah, they might try and hide it, but it's very difficult. And it'll be because they break the banking system, because of the bond market. So the cover is there, the story is there. I also think the higher for longer story is all about them trying to get inflation to undershoot, which I think they will do. I think it'll be below 2% next year and maybe down to zero. And I think core inflation gets to zero, maybe even negative in 2024. That gives them the cover to keep printing and to keep rates as low as possible. So just to show where we are, liquidity growth is starting to rise. We haven't quite crossed the year-on-year positive territory yet, but it's getting there. But you can see how bad the liquidity conditions were in 2022. That's what we felt in the crypto markets. That's what we felt in the equity markets. That's what we felt in the economy. And we're about to get to that positive phase, and it'll keep going up. Here's our forward-looking lead index for liquidity, keeps going. Here's the ISM, which leads liquidity by 15 months, keeps going. Peak liquidity looks like it's end of 2024, but that's just peak liquidity. Year on year, it doesn't go negative for a long time into the future. And 23 is about this shadow cowbell, some of the stuff we've talked about, like Fed net liquidity. The Fed have been doing QT, but liquidity's actually improved, which is why crypto assets improved all the way through. Because we've been offsetting it. We've been offsetting QT and the Treasury General Account via the reverse repo. That Fed net liquidity, obviously the correlation people know now. There's Bitcoin, Fed net liquidity. There's Ethereum, Fed net liquidity. There's the NASDAQ, which started to decouple. Crypto will likely decouple. It does that every time in the cycle. Once you get to this later crypto spring, it starts decoupling as well. Even stuff like ARK is all the same trade. Everything comes down to the seasonality as well, which is this banana zone idea of what happens in Q4, particularly ahead of election year, stuff like that. 91% correlation with seasonality right now. We're just going into the zone. The pullback should be the final pullback, the one we're seeing today, tomorrow, that kind of stuff. The NASDAQ, this is the semis, same. And then eventually, Bitcoin seasonality is obviously extremely positive. Same reason, because they're all driven by exactly the same cycle. And it's this cycle, and this cycle's about to play out. So there you go. I've given you a lot of global macro investor alpha there, which I've not done generally before publicly.
Raoul Pal's strategic acumen during the tumultuous period of 2022 wasn't a stroke of luck but a meticulously calculated decision rooted in extensive analysis and a profound understanding of market dynamics. What may have seemed contrarian in his predictions a year ago has proven remarkably accurate, as Bitcoin surged by over 100%. Pal's consistent bullish stand, supported by compelling charts and data, suggests that the crypto world still holds vast untapped potential. For those keen on understanding the ever-evolving landscape, Pal's forthcoming and detailed explanation about the anticipated influx of liquidity and its potential impact on the crypto market is a must-watch. Pal's foresight and bold moves amid the uncertainties of 2022 showcase his ability to navigate complex market scenarios. His predictions, which were initially against the prevailing sentiment, have stood the test of time. With Bitcoin's remarkable surge, Pal's conviction remains strong, and his insights provide valuable perspectives for investors navigating the dynamic cryptocurrency landscape. As he articulates the reasons behind his bullish outlook and the expected consequences of increased liquidity, Pal offers a compelling narrative for anyone seeking to stay informed about the future of the crypto market. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.